Hey guys, Rudy Rodriguez here with my good friend Jake Chesney. I want to cut this quick video to talk to you guys about the infinite banking concept, how I came across it and how Mr. Chesney educated me and helped me implement this concept into my own personal life. Quick story, I was introduced to the infinite banking concept through my good mentor who is financially independent and taught me that every millionaire out there implements this strategy into their investment portfolio. And I learned early on that if you want to have something in life, you have to find other people who've done it and do exactly what they've done. So he introduced me to Mr. Chesney, who is has been doing the implement banking concept himself in his own personal life for over 20 years and has helped other people implement it in their lives for the past 13 years. Thank you, Jake, for being with us today.
My pleasure.
In this interview, please share with us how you came across the infinite banking concept.
Sure. I'm 41 years old. When I was 19, my father said, "Jake, you need to be up at 6 in the morning because somebody's coming over to take your blood and you got to give them a urine sample." And I was just like, okay, whatever, Dad. And I did that. And it was for life insurance, of all things. I was 19, not getting married or anything anytime soon. I didn't think much about it. It was $100 a month. I found out later that he was paying for it. And fast forward about 4 years, I was graduating college, and he hands me my life insurance that he started on me at 19 and said, "Hey, why don't you start paying this now? You're making money now, and it's $100 a month." And I was like, "Whoa, Dad, I'm still not even dating anybody right now, and so not planning on getting married. Why would I want life insurance?" And he took me in and helped me understand why he bought this for me and why I would want to pay this $100 a month. And so after I understood that, I was like, oh, he's giving me an asset, not a liability. And the life insurance is really kind of something that I'll appreciate later, but I can use this in my life right away. So I was actually excited to take over this $100 a month bill that my dad handed me at about 22 years of age. A couple years later, I was actually in the insurance industry looking to sell insurance, and I started selling it, and I was referred to talk to Nelson Nash, is his name. He's now 85, but at the time he was about 65. And I didn't know what he did. I just thought maybe I could sell him life insurance because I heard he likes it. That was kind of my introduction, and he invited me over to his house, and I soon found out that he had been in the industry himself for several decades and was getting ready to write a book as he was getting out of the industry and looking to be more of a teacher and a mentor. And that was the beginning of becoming your own banker. He invited me as the only agent to join him and about 20 other individuals to meet every week for about the next 10 or 12 weeks. And what he was doing was creating the content for his book and getting the feedback of these other business owners and really well-to-do people in Birmingham as he creates the content of his book. And I felt very privileged at 24 to be in that room and learning these concepts, but really was intrigued to see these men that were in their 60s that were actually learning a lot of this for the first time as a pilot group for Nelson, and how they were really just kind of intrigued, and light bulbs were going off, and some regrets. They wish they had started a long time ago. And so I just felt honored to be in that room. And so since that time, I've been able to access Nelson as a mentor and a teacher of this concept. I immediately increased what I was doing to infinite banking, and since then what I took from that immediately was I can be the lender, not the borrower in my life. And my goal immediately was to never pay a dime in interest on any credit cards, and immediately paid off a little bit of school loans my wife had because I just got married. And my goal was to just never have any debt other than a mortgage. And so that's what's been able to occur. So every time I bought a car, the past, I guess it's been a little less than 20 years, it's been bought in cash using my own bank, using this vehicle that Nelson teaches. And it's the same thing now with my house. It's paid for this way. And then I'll show you here in a second, actually, we're gonna go over something on the drawing board of how you can be a more opportunistic investor when you use a tool like this, because you have access to cash that oftentimes are only opportunities that are only made available to those that have first been savers, so that they actually have the ability to write a large enough check to get into the investments. And so That's a little bit about my story. I've been doing this, like I said, 20 years now. Personally, actually, I should throw this in. Probably the most impactful moment that this process has impacted my life is when I was 29 and I wanted to move across the country. I wanted to sell one house and buy another house here in Illinois, and I wanted to start a business which didn't have any kind of salary, no guarantees and whatnot. And this was in the 90s when most of my friends that were working in corporate America were maxing their 401ks and getting great returns, and I was just putting my money in my bank thinking that this is what Nelson taught, so I should do it, and I kind of stuck to my guns there, thankfully, because when opportunity came to me to start my own business, what was key and important to give me that option was liquidity. And it didn't matter what the market was doing, it didn't matter, there were no taxes, and there were no penalties to access my money. So I could actually have the opportunity to do what I wanted to do in life because I had done this process. So that was really meaningful to me and my family to give us what we have now in terms of flexibility and freedom and things like that.
Wow. Thanks, Jake. I actually, if you don't mind, Jake recommended this book to me, and I picked it up and I read it cover to cover, and it's a very fascinating book. My big takeaways from this is if you're in business, Mr. Nash teaches you should be in two businesses: the business that you're currently in, and financing the business that you're in. Once you understand the principles inside the infinite banking concept, you realize just how powerful that compound interest is, and it's either working against you as your best friend, or it's it's either working for you as your best friend or against you as your worst enemy. And this book really highlights some powerful examples. I'm a pilot myself, Jake, and the book is a great example that I could relate to of a headwind versus a tailwind. And when you're implementing this concept, it's like you're flying an airplane with a tailwind. You may be flying at 200 miles an hour, but if you have a 100-mile-an-hour tailwind, you're actually going 300 miles an hour over the ground. But if you have a 100-mile-an-hour headwind, you're actually only going, instead of 200 miles an hour, you're only going 100 miles an hour. It would take you twice as long to get there. And that's what it is with your financial goals in life. It is incredible how much money we give away to the banks and other financing institutions when we can turn the tables around and finance ourselves, implementing the strategy and run our financial goals, get to our financial goals as if we were flying a plane with a 200-mile-an-hour tailwind that's going to get us there twice as fast. So that was my understanding of this. I've implemented this. I'm thankful to you, Jake. But I do have another question now. How is this, as an investment strategy, how does that fit into everything else, like all the other traditional strategies like bonds,
Sure.
stocks, mutual funds, things that are traditionally taught by financial planners?
Sure. A very simple way to explain this, I do this on a napkin a lot of times for people, so I'll just do it for you on this whiteboard, can you hold that for a second?
Absolutely.
I just draw a big pyramid here, and this is we call this the financial pyramid, and basically what we're talking about here is items like stocks and 401ks, which are generally made up of stocks and mutual funds and whatnot, IRAs, things that have higher risk, that have the ability to go up and to go down based on how things are going in the economy and with those companies, are at the top. In the middle are more conservative things maybe hopefully real estate for people, and a lot of times it would be considered bonds, okay? And so the rate of return on this might be less. A lot of times people will say, well, this might be 5 to 8% rate of return you hope to get long term, but that's more your safe money. And then right here, you hope to get 10 to 15%. Some people will say that, at least for their more higher risk investments. And then at the bottom is where you have cash, and this is really important for infinite banking because most time cash, people are thinking they're not getting a rate of return because you're talking about your savings account, maybe a little bit in a CD, 1, 2, 3%, depending on the times we're in with interest rates, money markets, things like that. But this is basically dead money that's just really having a hard time keeping up with inflation. So most people don't want to keep a lot of money in cash, in your under your mattress or whatever. And what infinite banking does is it comes along here, and I guess I could draw it like this and put a little block right here, because infinite banking really, I'll just kind of block this out here. Infinite banking has the rate of return of this middle sector. 5, 6, 7, 8, really 8 or 9% when you consider the tax advantages, because it's not taxed on the growth when you use it properly. It's not going to be an investment return, but it's not an investment at all. It's actually a cash instrument, because even unlike real estate and unlike bonds, you'll never go backwards. And so it allows you to treat it like a savings account. That's why we call it be your own banker, because we're talking about replacing banks, not necessarily for checking account convenience type things, but instead of creating 3 months income, now because the rate of return is higher, it's working harder for you, you can actually have 3 years of income and not feel like you're being done with your money, because your money isn't dead. It's still beating inflation, and because it's in cash, it's liquid, so you can then use it when you want, not just for an emergency fund, but now the emergency fund can also be an opportunity fund. And so I've used I'll take a chunk out of cash and throw it up here for a real estate deal or for an investment I want to make. So it's not about just being boring and conservative with your money. You can, and some people like that, but if you want to be, some of my best clients are entrepreneurs that like to take a lot of risk. And what they like about this is their safe money that's also accessible and not subject to market timing or taxes or penalties like a government-sponsored plan, like a 401k or something like that. So that's where infinite banking fits alongside these different types of vehicles, and that's really important to see that. Does that answer it like you were thinking?
Yes, that when you showed me that, Jake, that really made it makes sense. Like, where does it fit into the strategy, the grand strategy of things? And one of the big takeaways that I personally had on this is just the keyword liquidity and tax sheltered. Because when you, and I think we'll go into this in a moment here, the way this is implemented is through an insurance policy, correct?
Right.
And very few people really understand the power of cash value whole life, right? And the fact that you, as a policy holder, actually have first dibs onto where that cash gets invested. And normally insurance companies, when they, if my understanding is correct, when you pay your premium, they invest the premium, and then you get the policy. But the loophole here that we get to take advantage of with this concept is we have first rights, therefore we can take that cash out and do with it what we see fit, correct?
Correct.
But we can take it out without any sort of tax penalty.
That's right.
And we'll see, we're getting a little bit deep into the strategy here. I think Jake will kind of elaborate on that a little bit more, and I'm sure you can.
Yeah, we may have lost some viewers already when you heard the word life insurance and whole life. Like, already understand that. One of the key concepts Nelson talks about is the ability to not be prejudiced against what you've already heard in the past in order to take advantage of opportunities in life, including this one. And just to segment that out a little bit, this is not any insurance policy from any company. There's actually, Nelson teaches there's really only like 7 or 8 companies that qualify to the ideal for implementing this policy. And those companies have one common trait, is that they're mutual, meaning they don't have stockholders. So at the end of the year when they have profits, the people that get paid first are you, the policy owner. Okay, so there's many companies that have actually used to be mutual and now have demutualized in their stock. But these companies that are mutual, these 5, 6, 7, there's probably 10 or 12 if you look hard enough, they've been paying dividends every year to their policy owners for over 100 years, without miss, right through the Great Depression, right through these past 10 years that have been tough on our economy. And so that's key, a mutual company that's been doing it successfully for over 100 years in a row.
Right. So Jake, can any financial advisor or insurance agent implement this concept for people?
Technically, they could. They could sign you up and get you a policy, and you might be thinking you're doing it. The reason why I'd say no, though, is because what I just said earlier about the companies. Unless they're going to use one of these companies that are mutual, that have been paying the dividends for over 100 years, then it's not ideal. In fact, it could be pretty bad, actually. It can be a pretty wide range of what kind of policy in terms of your rate of return and things like that. So I guess yes and no to that question, but really what we've done, not we, I'm not a part of this, but Nelson Nash, what he's done is he's created an opportunity to be a registered practitioner, which I've done, and what I would recommend if you look at his website, which is I want to write infinitebanking.org. I guess I can write it here. Infinite, like infinite possibilities. Infinitebanking.org. And on there you'll see a list of the registered practitioners, and you'll see me on there. But all these guys have gone through and decided I'm going to use this the way it was taught, and I would stick with one of them. And they sell from various companies, so it's not a company thing. It's just more of a purity thing for this concept.
Right, it's a strategy in itself, and to be implemented exactly the way it's taught, it's recommended that you go with a practitioner that is taught how to implement the strategy specifically, because some people might change it and it won't be implemented exactly the way it was taught.
Right.
So for anyone out there, Jake, who's interested in learning more about the infinite banking concept or would like to implement this into their own lives, what's the next step?
Well, like I said, you can go here and just pick out somebody. I'd be happy to take your call. What I would just keep in mind that you're not putting us out by calling us. If we don't call you back, call someone else. But I call people back, so you can start with me if you want. And if you're not comfortable for personality or for distance, that's fine. Most of us are plenty successful. We don't need your business, but we enjoy what we do, and we definitely would take that call. And just know that the way we work is we don't send you a bill for our time. I just met with somebody this morning, and we're looking to implement this sometime in the next year or two. And that's how it is. It's a consultative type of thing. It might not be right for you right now. Although that said, I built my practice with people right out of college that could save $100 to $200 a month. So it doesn't take a wealthy person or some successful business owner to do this. And also my clients are in 40 states, and so depending on how you are, but you can work with anybody. They don't need to be down the street. And better to work with someone across the country than down the street if they're doing it the right way and you trust them. So. You can go to my website, is ownyourlifewithus.com, and that's long, I know, but own your life. So if you can remember that phrase, own your life with us. Own your life with us.com. Okay, and there you can learn a little bit more about me, but you can also contact me there and set up a consult. I would just start with that and then see where that goes, and then we can help you decide what your timing is.
Awesome, Jake. Thank you so much for your time. I appreciate you being with us today. Guys, if you liked what you learned today or you want to learn more, I recommend you connect with Mr. Chesney about the infinite banking concept. The website is ownyourlifewithus.com. Go there now. Mr. Chesney has some additional tips that you can watch, some videos you can watch to learn more about this concept and other financial concepts. Ownyourlifewithus.com. Right. And I hope you enjoy this value. I encourage you, like Mr. Chesney says, it only takes as little as a couple $100 a month you can commit to starting this concept, starting this habit in your life. Start creating that tailwind in your business so you start reaching your financial goals faster than if you would with that financial headwind. So thanks for being with us, guys. I hope you appreciate this video and the value got out of this. We're here to help you and to educate you and educate the marketplace. We really believe that the more we help others, the better off we'll be. So here to help Mr. Chesney and Rudy Rodriguez. Have a great day.
Good. How do you think we did?
Guess how long